What's going on, guys? My name's Joe from Financially Savvy, back with another video for you guys. Today we're going to be going over credit card hacks, specifically how to earn credit card rewards, both cashback and points, and also how to increase your credit score, which is critically important. It's one that I say with a little bit of like a caveat, in that generally I think credit card scores are a massive scam because they were created by the credit industry to essentially score people on how much, how well they can manage their debts, right? And therefore you have to have debts to have a score, and you have to have a good score to get good credit, right? As in like get preferential loan rates and interest rates and things like that. So generally it's a little bit messed up in a way, right? Because generally speaking, debt is terrible, right? Consumer debt specifically is a terrible thing that you want to avoid at all costs. However, if you manage credit responsibly and you can manage a credit card responsibly, you can put yourself in a position where you can earn all of the cashback rewards, all of the points, and travel pretty much, for free, or save yourself a fortune on travel costs whilst accruing zero actual debt, okay, and paying zero interest. So I'm going to go over in this video how to do that. We're going to be going over how credit cards work, the kind of ins and outs behind the scenes, of like how the credit industry works and how the risk assessment piece of that works when they're looking at you as a potential borrower. We're going to be then going into example credit cards, things that you should and shouldn't do with a credit card, and all this kind of stuff to basically make sure you are as optimized as possible when it comes to using a credit card. Now, one massive note I want to make before we get into this is I'm not sitting here telling you all to go and get credit cards and start using them. What I am saying is if you are responsible and you want to be able to earn rewards and you think you can manage a credit card responsibly and pay your credit card off at the end of each month, then you should be doing this because it's a no-brainer. I personally have a rewards credit card, and so far this year I've earned hundreds of pounds worth of points from buying things that I would have bought anyway. Okay, so I'm going to go into this in detail, but the idea is you use your credit card to pay for things that you'd pay for day to day anyway. So, your groceries, your fuel, when you go out to eat with your wife, like all of this kind of stuff, okay? And then when it gets to the end of the month, you pay that off from the money that you were paid at the end of last month that you would have used, anyway. So normally you'd pay for your groceries out of your checking account or your current account in the UK with your debit card, right, throughout the month. Instead, leave that money in your bank account, pay for it on your credit card, and then pay it off at the end of the month before you get charged any interest. Once you kind of get into a habit with this, it's really, really easy to do. It actually kind of simplifies it more than anything else. And like I mentioned, it means you can accrue a whole bunch of points, which I'll kind of talk to you about in a minute. It might sound like, you might not qualify for these kind of things, but trust me, most people do. However, most people aren't doing this, and you're leaving free money on the table, okay? The best thing is as well is by managing your cards responsibly this way, in the way that I'm going to teach you, your credit score is going to go through the roof. You will end up with at least a good, if not an excellent credit score after practicing this for, a month or like a year or so. And by doing that and having such a good credit score, you're going to get access to preferential loan rates on things like mortgages, okay? And if you do need to take a loan, because sometimes, it may be necessary to take out a loan in order to pay for a car that you can't afford to pay for in cash, things like that. Generally, my advice is avoid debt. Avoid it at all costs, however and wherever you can. However, sometimes I do appreciate myself having been in a situation where I didn't have the income to pay for things like a car, just in cash. Unfortunately, most people are in that same situation. So you do need to take out loans, okay? And doing this will ensure that you have a superb, like an excellent, officially, technically, an excellent credit rating so that you can get those preferential interest rates and loan periods, and it will save you money in the long run as a result. Okay, so let me make my face a bit smaller here. So what we're going over is credit card hacks. Now, this is a module from my Financial Freedom Academy. So the Financial Freedom Academy, for anyone who's not aware, is where I help people take control of their finances, eliminate their debts, and retire at least 10 years early. Okay, so on average, I'm saving my clients over £20,000 in interest on their debt repayments, reducing their term on average by 5 years, and helping them retire on average 16 years early. And these are people just like you. So don't sit there thinking, oh, I couldn't do that. Because you can, I promise you. I'll leave a link in the description below so that you can book a call with me to see if you're a good fit for the academy. And if you are, we can make that happen for you too. Credit card hacks. Like I said, don't take this as an instruction to go and apply for a load of credit cards, right? What I want to talk to you about first is how credit cards work. So when you use a credit card, you are borrowing money from a lender, okay? It is not free, right? And it sounds really obvious, but I feel like I need to kind of spell this out. So when you borrow money from a lender, it's not free. Your credit card company makes money by facilitating the transactions, okay? So MasterCard, Visa, those kind of card issuers. The lender itself, so if you've got a MasterCard for Chase Bank or Barclays Bank, then the Chase and Barclays in that example are the lenders, and they earn money from the interest that you pay on your balance. Now, like I said at the beginning of the video, the idea is we're going to get you to not pay any interest, right? They're just going to give you all of the rewards. So we're rigging the system against them rather than against you. Interest, the last point on here, is charged as a percentage of what is borrowed, okay? So if you have $100 on your credit card, £100 on your credit card, and you're paying 30% interest, that 30% interest will be charged on an annual basis, but will be divided between each month of the year, okay? So some important points to note. Credit card applications will temporarily decrease your credit score by a few points. So just bear that in mind. If you do apply for a credit card, your score will decrease temporarily, and it can take 6 months, up to 6 months, for it to go back to what it was. So avoid making multiple applications for loans or credit close together, and avoid, like the plague, applying for credit cards or loans at least 6 months before you may need to apply for a mortgage, because you want your score to be as high as possible so you get the best mortgage rate and terms possible. If you have an excellent score, lenders will give you preferential offer periods and interest rates on loans, mortgages, and credit cards. And all credit cards have a limit, okay? No matter how rich you are, generally, unless you're an ultra billionaire, in which case none of us are aware of what kind of credit cards they may get access to, but generally all credit cards will have a limit. Now, here's some best practices for you to help you avoid getting into difficulty with a credit card. Do not use more than 30% of your balance, okay? So this is one of the criteria that lenders look at. So when they're looking at your credit score, is how much of your accessible credit you are utilizing. So your credit utilization, if it's below 30% consistently, then this will have a positive impact on your credit score. Maintaining a credit card balance over 50% will have an ongoing detrimental impact on your score, because it may show that you're in difficulty and unable to pay off the debt that you're in. So between the date that you get your bill and the due date, no interest is going to be charged, okay? If you carry a balance beyond this, you'll be charged interest on that amount that's on your statement. So that's important to note. Here's some more best practices, more of what not to do generally. So do not use a credit card to withdraw cash. This is a major rookie error you do not want to be a victim of. The fees and the interest are usually astronomical, like so much higher versus purchases. So just avoid it. Again, like the plague, right? I'm not trying to scare people off, but honestly, if you're in a position where you don't think you could manage a credit card effectively, just stop watching this video and just don't do it. If you can manage them effectively, and anyone should be capable of doing so, then there is money to be made, points to be earned, and it will help your credit score if you do, okay? This isn't to freak you out, it's just to make sure you are fully aware of the risks, okay? So if you make a minimum payment, you're going to be charged interest on the full statement balance, okay? A minimum payment only really covers the interest plus a small percentage of the outstanding balance. Making a minimum payment is generally a bad idea and will ultimately result in a downward spiral of debt accumulation. So always pay your balance in full wherever possible so that you avoid paying any interest whatsoever. Don't let the banks have any of your money. So here's how you use the system to your benefit. Simple 4-step system. Number 1, get a rewards credit card, okay? So one that's valuable to you is what I've written here is the real key. So whether you collect Avios points, Air Miles, Nectar points in the UK, which is associated with one of the big supermarkets in the UK called Sainsbury's, and also Argos and eBay as well. Cashback rewards as well. Obviously that's generally across the board. You're going to get cashback from the credit card, so you can then use that anywhere. Once you've got a credit card that's valuable to you and gives you the kind of points or miles or cashback that you want, then use it for all of your normal, keyword normal, monthly expenses. So groceries, fuel, applicable bills, anything you would cover with the money in your bank account normally. And then at the end of the month, pay it off with the money in your bank account. All right. It's dangerous if you regularly doing this is dangerous if you regularly run out of money before each payday, because obviously you don't want to get to the end of the month and realize you've spent more on your credit card than you actually have available in your bank account to pay it off. That's a disaster scenario you don't want to get into, because then you're already behind as of the next month and it's just a slippery slope. So if that's you and you regularly run out of money before payday, you need a budget first. So go and start doing that. I'll leave a link below to the free budgeting tool that you can download from my website. That'll be the second link in the description. So this takes discipline, ultimately, running this kind of situation that we're talking about here, and careful management at first. Excuse me. So it takes discipline and careful management at first, but once you're in the rhythm, it works a charm. And like I said, you can accrue a lot of money in cashback and points and also boost your credit score. So then number 4, you're going to accumulate those points, right? And miles and cashback for every year for the things that you were buying anyway. So that's the key point here, is this is stuff that you would be buying anyway. It's normal expenses that would have been coming out of your checking account and your current account. So it makes sense to just put it on a credit card, pay it off with the money that's in there, so long as you're good at managing that, and accrue the points. So the next thing I'm going to do is I'm going to jump into an example budgeting template that I've set up for a theoretical couple with their finances and what they spend every month, to show you kind of how it breaks down. Okay, so I'm just going to open that up now. Okay, let's go to the spreadsheet. So in this situation, this couple, let me have a look here. They earn around £2,500 or dollars, whatever you want to call it, every month. They get, a little bit of side income and some child support as well, which everyone does in the UK, so that's why I've included that. And you can see I've mapped out their expenses here. Now, the things I've highlighted are the things that I think could easily be put on a credit card, okay? So, and this is like conservative, you can do much more than this. So all of their household bills, because they're recurring every month, they can just put on their credit card. As soon as they get paid, they just pay it off in one go. All of their expenses are then on their credit card, done, covered, and paid off, right? Their food shopping is over here. Their council tax, TV license, all of the gas and electric, water, internet, all of this kind of stuff. Also their luxuries I've highlighted as well. So eating out and takeaways, Netflix, shopping, so just general kind of an allowance every month for buying things that they need to buy, music subscriptions, and takeaways. So I think this is all very, very reasonable. I've not included the mortgage, which you could also put on a credit card if you wanted. Not advising it, but you could. Your holidays that we put here, kids' Christmas presents that we've got up here. So I've not included those things. I've only included what's highlighted here. So let me highlight this again so you can see that plus this here comes to just over £2,100 or dollars a month, right? So if we go back to the presentation, you can see here total qualifying monthly expenses are around £2,000. The reward points example that I'm using, so basically with this credit card that I have, and it's a real world example, I think I've included it in the presentation later on, you get 20,000 bonus Nectar points are achieved in in the first month, right? But so the bonus with this one is if you spend more than 2k in the first 3 months of having the card, you get 20,000 bonus Nectar points, which are worth £120. So they've done that in the first month. So being even more conservative than the example I've just given you and just using the groceries and the fuel, you'd accumulate that within 2.5 months and earn the £120 that you wouldn't have had otherwise for things that you would have bought anyway. Are you with me now? Cool. So that example, so you got £120 of points there in the first month. You've also spent £2,100 and you get 2 points for every pound that you spend on this card. So that's another 4,200 points, which are worth £21 a month. So times 12 for the year, you get £252 for just buying things that you would have bought anyway. Then you add on things like gifts, holidays, birthdays, Christmas shopping, flights, all of this kind of stuff that takes place throughout the year that you would have spent out of your checking account or current account anyway from the money that you've earned could easily be worth at least 5k a year, if not far, far more. I know for us, it'd probably be more like around 12 to 15k every year on all of this kind of stuff. So, you know, I've gone conservative and gone with 5k. 2 points per pound again, that's 10,000 points. 10,000 points are worth £50. So potential earnings, you add all of those amounts up, that's £422 worth of points every year that this person could accumulate from money they were going to spend anyway. Plus, another bonus here, all the shopping that was done at partner stores, which includes, for this card, Argos, Sainsbury's and eBay, they actually get 3 points per pound, not 2. So the £2,100 a month that they were spending, around £700 to £800 a month of that was on fuel and groceries from that store there, Sainsbury's. So they're actually getting 3 points per pound for a third of that spend. So this number is actually more like £280 to £300 every year that they're going to accumulate. So this is more like £450 a year. So again, conservative numbers, £422 for doing nothing that you wouldn't have done anyway. It's cost you nothing extra. You're just getting free money. Okay, so long as you pay it off at the end of the month, don't let your balance go past the end of the month and pay interest, please. Right, now you think about this, right? This is how you stack these rewards with cashback rewards, okay? So go to my channel and watch the cashback rewards video as well, if you haven't watched that already. So think about it. You're going on holiday, right? Family holiday is going to cost you around 5k easily. For a family of 4, for a reasonably nice holiday for 2 weeks, 10 days, whatever it is, it's going to cost around 5k for a nice all-inclusive resort, okay? So cashback, currently on the cashback reward site that I use, Top Cashback, you're going to earn anywhere from 3.5% to 5% on the holiday that you book. So you're going to save £175 there immediately. Then you use your credit card, okay, to pay for the holiday. Now, the amount that you put on the credit card is the full 5k, okay, because you're going to get the cashback from the cashback site's going to get the cashback bonus from you spending that 5k on their website. So you pay for the full amount. It's not the 5k minus 175 that you put on the credit card. It's the full 5k. So you're getting cashback on the full 5k here, and you're going to get rewards points on the full 5k down here as well. 2 points per pound, that's 10,000 points worth £50. You've just saved £225 on your holiday that you would have booked anyway and would otherwise have cost you 5k. Instead is now costing you 5k minus 225. I'm not going to do the quick maths because I feel under pressure and I'm probably going to get it wrong. So the important thing here, an expression I love, is don't let the tail wag the dog. I'm going to go back into presentation mode. Okay, so this means basically don't spend money for the sake of earning points or cashback or whatever it is. Use the card for things you would have bought from your bank account anyway. So things that you've got in the money in your bank account to cover, and make the money back as a result, right? No brainer. Okay. If you're not doing this, honestly, you are leaving free money on the table. For some people, they just generally like to avoid credit cards. I'm all for that. Please, carry on doing what works for you. All I'm saying is it's not very difficult to manage this. Even if you just start with one expense, just putting your groceries on there, okay? And then as soon as that expense appears on your credit card, maybe don't even wait till the end of the month. Just pay it off as soon as it appears. Pay it off, it's gone, you don't need to worry about it, and you've just earned yourself some points. It makes sense. Now, let's go into some credit card examples. So starting with UK credit cards. So I'll spend a couple of minutes on this. If you're US and you want to know what the US cards are, just skip forward until you see US at the top of the banner here. Okay, so for the UK, it's the Amex Platinum Cashback Everyday card. For this card, you get 5% cashback for your first 3 months. And after that, 1% cashback. So this is on everything. You must spend at least £3,000 a year to qualify for any cashback at all. But as we've seen from the example we just went through, for a general, average household, that's pretty easy to do, 3K a year. You're going to do that in the first 2 months probably. So after this, so 0.5% cashback on the first 10K and then 1% cashback after that. So after your first year, it's 0.5% cashback on the first 10K and 1% cashback after you spend 10K every year. However, if you're going to spend more than 10K a year with then there's an Amex Platinum card, which has a fee, which I'll talk to you about below, which actually has better rewards, even though you're paying a fee. Okay, so I'll just go to the next one. We'll get to that Platinum card in a minute. The next best free rewards credit card. So I should mention that one previously, and this one, there's no fee on these, no monthly or yearly fee. They are free, so long obviously as you pay them off every month and you're not paying any interest. Okay, but generally there's no fee for the card. The Amex Rewards card is the next best free rewards credit card in the UK. So you get 10,000 bonus Amex points if you spend £2,000 in the first 3 months. Again, easy to do in the example I gave you. And these can be converted into different points. So air miles, nectar points, and all kinds of other stuff, and vouchers and things like that. You get 1 point per pound that you spend, and you'll get 10,000 bonus points, which are worth around £80 in nectar points, or £50 or a £50 voucher, which you can cash out for any kind of like store voucher, or 12,000 air miles for British Airways and Virgin. Okay, so another great option there. The best rewards cards with an ongoing fee. Okay, so please be aware, these cards you will be charged yearly for using, and they will be charged to your credit card balance. Okay, so every year, for using that Amex Preferred Rewards Gold credit card, you're going to be charged £160. However, the rewards are pretty great and generally will be more than the £160 that you're paying. You'll get 25,000 bonus Amex points if you spend £3,000 in your first 3 months. Okay, you'll get 1 point per pound plus 2,500 points every time you spend 5K. So, we're talking a lot of points here. So that's a maximum, you can earn a maximum of 12,500 points per year via that method, okay? Hitting the £3,000 bonus yields 28,000 points, which is worth around £185 in nectar points, £140 in vouchers, or 28,000 air miles and hotel points that can be used with BA and Virgin. So already more than that £160 a year that you're paying, you see. You also get, so if you are a frequent traveler, obviously the airline points with BA and Virgin are going to be awesome, a great benefit. Plus, you get 4 free visits to airport lounges internationally every year. So if you're traveling more than 4 times a year and you like going to an airport lounge, and if you've not been in one, they're fantastic, then this is great for you. Okay. The next one is the Amex Platinum Cashback card that I mentioned to you about earlier. So if you're going to spend more than 10K a year, this card is the best for you if you want cashback. You get 5% cashback in your first 3 months, similar to the other card. However, it doesn't drop to 0.5 after that. It goes down to 1.25% after. So if you spend more than 10K a year and you want cashback, this will pay more than the free Amex Rewards card, even with the fee that you're paying. And this one is only £25 a year. Now, for the US market, what we're talking about here, so this is the best free rewards credit cards again. So the first one is the Chase Freedom Unlimited credit card. You get 1.5 to 6.5% cashback on purchases. So it starts 6.5% on travel, 4.5% at drugstore and restaurants and takeout, and then 3% on all other purchases. So this qualifies on the first $20,000 of spend in your first year. And after that, it's 5%, 3%, and 1.5% on those same categories respectively. your intro offer for this card, so you get an extra 1.5% cash back on everything you buy on the first 20K a year. Now, I should have mentioned this before I started talking about all of these credit cards, but I just want to make it clear I'm not affiliated with any of these lenders or any of these card issuers, okay? So there's no links below, no affiliate links or anything like that. If you want to sign up for these cards, you're going to have to go through another website. I want to completely declare that I'm not, associated with them in any way. Genuinely, these are just the ones that I've done research on and I think give the best rewards for different situations, whether they're free or an annual fee. Okay, so genuinely my honest opinion. Now, the next best free rewards credit card, I think, is the Wells Fargo Active Cash Card. So with this card, you're going to get 2% unlimited cash back on everything you purchase. And for an intro offer, you're going to get $200 worth of cash rewards after spending $500 on purchases in the first 3 months. So that's pretty decent. So if you've got an expense coming up that's going to be like $500 or more, and you've got the cash to cover it in your bank account, get one of these cards, potentially, put it on the credit card, you're going to get $200 back. Like, hello? Come on, that makes sense, right? You're going to get $200 discount, basically. Then pay it off from the amount in your bank account anyway, and you're only $300 down instead of $500 down. No brainer. Okay, the best rewards cards with an ongoing fee in the US. So I've gone a little bit off camber here because generally Amex do have the best points and reward systems globally, so UK and the US. However, I did want to give a shout out to the Sapphire Preferred from Chase credit card. So with this card, you get 1 to 5 times points on purchases. So got a breakdown here. There's also $50 in Ultimate Rewards hotel credit every year that you get. You do pay $95, so that should be dollars per year for this credit card, but you get 5 times points on travel, 3 times points on dining, and 2 times points on all other purchases. So that's a whole ton of points. And if you're spending on all of these things, you're going to get a decent amount of points, which are very, very likely, if you're using it consistently, to more than cover that $95 a year fee. And then good old Amex is back again. So again, this should say dollars, apologies for that. So this is the best, in my opinion, rewards credit card with an ongoing fee in the US, the Amex Express Gold. So it's basically the equivalent of the Gold Preferred credit card for the UK. You get 60,000 reward points after spending $4K in your first 6 months. 4 times membership rewards at restaurants, takeout and supermarkets on up to 25K a year. So you're probably not going to hit that. But, that's 4 times membership points on pretty much everything you're going to be spending per year. If you do go over it, you still get points. It's just done at 1 times per dollar. You get 3 times points on flights that you book direct or as in like direct with the airline, or via amextravel.com. Again, no association with amextravel.com, but this genuinely from the research I've done. And you get 1 times points on all other purchases. So again, if you're spending on average 2 to 3K a month on your credit card and you're paying it off from the money within your bank account, you're going to more than earn $250 a year from your spend on that. So those are the rewards credit cards that I like, and having done my research would, use myself. So other benefits of using credit cards, tracking. So generally having a credit card makes it much, much easier to track your expenses if all of your household expenses are just on one card and then cleared from your checking account each month, because it's all from one place. You don't have to worry about the odd thing coming out of, the cash in your pocket or your wife's second bank account and the bank account you've got randomly that sometimes you put some money into for savings and things like that. It means everything's in one place and you don't lose track of anything. If you're a keen budgeter and expense tracker, then it generally helps. Also, fraud protection. Okay, so this is a huge one. With a credit card, if you've got any unrecognized purchases and you raise them and you can show that it wasn't you, then your card issuer, your lender, is going to immediately refund that amount and investigate it for you. There's no money taken out of your account and nothing you can do about it. For people get sketchy about using credit cards online. understandably so, because obviously there's a lot of scams around. And if you do that, and if you're worried about using card payments online, use a credit card instead, and then pay it off from your checking account, okay, or your current account in the UK. Because then if there's any fraud, so they say that website, you use a dodgy website and they do take your card information and they start making purchases against it, you're protected, you're insured 100%. So that your lender is going to refund that amount to you immediately as soon as you raise it to them. You also get price guarantees. So these next two are two things that very, very few people know about. Okay, so price guarantees is one of them. So if you found something cheaper elsewhere after making a purchase, you can claim the difference from your card issuer. So say you buy a TV and it was $700, and you find out you could have got it for $550 somewhere else at a different store because they had a special offer on the same date. Okay, you just phone your card issuer, you send them the link, the proof that your receipt, and then the link showing that it was cheaper elsewhere on another date, and they'll refund you the difference. The next one is extended warranties. So this again can be a bit of a game changer. So if an item that you own breaks down, especially electronics, obviously, because generally, they do sometimes have faults. If they break down after the manufacturer's warranty, which is generally 1 year, so basically your card issuer may offer their own insurance that could actually cover you for up to twice as long. So you could get a 2-year extended warranty with your card issuer. So if it breaks down, they'll replace it for you. And it saves you having to go through your, trying to find a receipt that's a year old and things like that. Now, the big one, how to increase your credit score. Okay, so here's basically 10 things that I found are great at increasing your credit. So if you've got a credit score right now that you want to improve, then this is going to be a game changer for you. So stay tuned. If you want to increase your credit score, you first of all, proving where you live is a huge one. They want to essentially know that they could track you down if you don't pay your debt. So providing your electoral address is going to increase your score if it's not already on there. So register with the electoral roll in the UK at your current address, or register with the equivalent in the US. The second one is building your credit history. So if you've got little or no credit history, then this can make it difficult for companies to assess you, because they don't know what you're like as a borrower, essentially. So they don't know how to see, what your history is, and therefore your credit score will be lower as a result. So follow the steps that I'm going to talk about, these next steps, basically to build up your credit history. One of the best things you can do to do that is to make regular payments on time. So paying your accounts on time and in full each month, that should say, shows lenders you're a reliable and responsible borrower. Okay, so essentially here the key thing is that old and well managed accounts will usually improve your score and consistently improve your score. However, unused credit cards will have the opposite effect. Okay, so I was speaking with someone in the credit risk assessment industry a few days ago, and what they were saying is when you apply for credit, the report issuer, so the credit score companies, will send around 900 pieces of data on you to that lender that you've applied for credit with. Okay, and what they'll see is 2 years worth of numbers, essentially. So these are zeros, ones, and twos, and maybe a couple of other things that mean as well. And what they essentially are is codes. So a zero on your credit score, so if they're looking at one credit card that you've had for 2 years and they see 24 months worth of zeros, what that says is you've got a credit card, say with 10k of available credit on it that you've not touched, and the zero every month is showing that you never used the credit card. So every time you had a statement come through, there was nothing owed on the credit card. What that's showing them is that you don't really need the credit card, and you're not going to use it. So therefore they're not going to make money from you. So therefore they're probably less likely to give you the credit card, because it's going to cost them money to issue it and manage your account, and you're just not going to use it. If you've just got a series of ones, what that means is you're statement came through with a balance on it and then you've paid it off, okay? Or you've made a payment that's more than the minimum payment is the key thing. And what that shows is that you're going to use the credit card and you're also a responsible person who's likely to pay off their balance, at least every month, at least often, if not every month. And they're likely to maybe make some money from you in interest. Obviously, we need to avoid that bit, which is why they don't know that paying off your balance every month is going to come back as anything other than a 1. So they're none the wiser, essentially. If you've got a 2, that means that you've used your credit card, you've received a statement, but you've only made the minimum balance. And that is generally a bad thing. Yes, they know that they're going to make money from you in interest. However, it could mean that you're unable to actually manage a balance that you may accrue, and therefore you could be a huge risk to them, as you may not be able to afford the amount that you're putting on your credit card, which is why you're only making minimum payments on the other credit cards that you've had or have. Any other number is generally a bad thing, because it means like other issues, like you've missed a payment and things like that. So generally you want a credit score that's got a whole bunch of 1s on it, because it means you've used it, you've received a statement, and then you've made a payment. That's what they want to know, and that the payment was more than the minimum balance. Okay, so that means you're responsible, you're going to use the credit card, they might make some money from you and it's worth lending to you, and you're not going to be a risk to them. That's the ideal scenario. So there's some industry insights there you may not have heard before, hopefully. So number 4 here, keep your credit card utilization low. So we mentioned this earlier on in the presentation. Your credit card utilization is the percentage you use of your credit limit, and a lower percentage will be seen positively by lenders and will ultimately increase your credit score as a result. So your target credit utilization should be 30% or less. Okay, obviously target less. Every month you want to be using less than 30% of your total available credit. So long as you're paying it off every month and you're not earning any interest, it doesn't matter too much. Generally, if you're showing that you can put a certain amount on there and pay it off every month, the credit card company will just increase your balance for you, so that then your credit utilization becomes lower and improves your score. One other thing as well that's come out more recently is instant score boosts. Now, I know for a fact that these are available in the UK. Whether they're available in the US or not, I'm not sure, but you can check, because generally the scorers and the report issuers like Experian and the like are the same internationally. So if you securely connect your bank account to your Experian account, this will show them how well you manage your money. And they'll essentially share a summary of your boosted data, so data they didn't get access to before, and they'll reward you for that. And they'll share that with participating lenders when you search and apply for credit. And because they've now got more information on you and can make a better assessment and ultimately provide better, options to people, which they're more likely to make money from themselves, then they're going to give you an instant score boost, and it can boost your score by 50 to 60 to 70 to 80 points maybe. So it depends on how good you do, how well you do manage your money, but this is something you should of course check out, because if you can get an instant score boost, it makes sense to do so. Okay, next up, so the really, really important thing here, check for errors and reports. So check for errors and report any mistakes that you see on your credit report. So even small mistakes such as address errors and things like that can affect your score and could result in your credit being declined. So make sure everything is accurate. Contact the provider directly. So if there's a piece of credit on your report from a particular lender, let's say a credit card or a loan company, and it's incorrect, you need to contact them directly to get it corrected. Or you can raise a dispute via the credit report issuer, such as Experian. So negative information that is correct, so a negative score, so a missed payment, things like that that was actually correct. But if it occurred during a special circumstance, for example, a hospital stay or when you lost your job, you can actually contact the report issuer and have it noted as a notice of correction on your credit report to explain what happened. Generally, it's not going to make a huge amount of difference, but it may make a difference. It may mean the difference between getting approved or declined. It may mean you could be approved for something you otherwise would have been declined for if you didn't have that notice of correction on there. So again, definitely something worth doing. Monitor your report for fraud as well. So we touched on this again earlier, but fraudsters could take out credit in your name without you being aware. So if you do see something on your report that is wrong, such as, an application you don't recognize, raise this with a report issuer and they should be able to do something about it and to get it removed. It's a lengthy process. Ultimately, it's not easy, but it's definitely worth doing. Another one here is avoid moving home a lot. Okay, so it's not always avoidable to do this. Obviously, if it's life circumstances mean you have to do it, but it's worth bearing in mind that lenders like to essentially see stability in your circumstances. So they want to know that you're a stable person with a stable lifestyle. And for example, if you're moving home frequently, it might make lenders think that you're having trouble paying rent, for example. So it's not fair, but they have to do risk assessments based on what they're, happy to lend to people and whether they're happy to lend to people. And that's one of the things they will look into. Another one I mentioned previously, but just to touch on again, keep old active accounts open to show a long credit history. Active is the key word here, okay? It can be good to show lenders that you can essentially successfully manage multiple credit accounts, especially over a long period of time, because most scoring models will reward you for having long-standing mature credit accounts and for only using a small portion of your credit limit. Hopefully that makes sense. So again here, don't leave a credit account open if you're never using it, because you're just, like I mentioned a minute ago, you're just going to get a bunch of zeros come back on your credit report, and it's not going to be an attractive, risk for people to lend to you, because it's going to cost them more money to issue the card and manage your account than they're actually ever going to potentially make from you in interest payments. So only keep active accounts open to show a long credit history to improve your score. And then final one is to consider getting a credit builder card. So this will help to rebuild your credit score. So these are specific cards which typically have a low spending limit and also very high interest rates to basically incentivize you not to actually accumulate any debt on the card. So they might briefly cause your score to drop when you apply for them, as I mentioned earlier, and it can take 6 months for your score to correct itself after you do have that initial drop. But in the long run, it will help you build your score over time by making small, regular, on-time payments. So the next steps for you guys, first of all, if you could like and subscribe if you've watched this far, then clearly you've found value and something helpful from this video. So I'd really appreciate it if you could like and subscribe to the video. Like the video first, it would really help me and the channel because I'm just getting started here. If you could subscribe as well, that would mean the world to me, and I'd love to have you on board so you don't miss future videos. And then take the steps from this video that are appropriate to you and your circumstances. So what I mean by that is, don't go applying for credit cards if you've got a poor history, if you're due to apply for a mortgage soon, or if you're terrible at managing debt, clearly, right? So take steps that are appropriate to you. Find a card that is valuable to you and gives you the kind of points that you want and that you find, valuable for your circumstances, for the kind of store that you use. Or if you're a traveler, get one that gives you good travel rewards, and take the steps that are going to help you kind of improve and optimize your finances. There's ultimately no one size fits all approach when it comes to credit cards and credit. So make sure you're doing what makes sense for you and seek the advice of a financial advisor or someone that you trust with finances to help you with this. If you want to reach out to me, you can do so via Twitter. Just send me a DM. If you're ready to get out of debt and make your money work for you, then see the link below about the Financial Freedom Academy. Like I mentioned, it will be the first link in the description below. We've helped people save an absolute fortune in interest payments to clear their debts. And we've also helped people make a lot of money as well via things like cashback rewards and credit card hacks and a whole bunch of other steps that have optimized their finances and helped them improve improve their financial situation. Again, we're also helping people become financially free and retire early as well. So if that is something that you are interested in, then see the link below, book a call with me. Let's see if you're a fit for the academy and get you onboarded. The requirements, if you are interested in joining the Financial Freedom Academy, are that you have an income of more than $3,000 a month, so household income of more than $3,000 a month, and a desire to become financially free. That's it. So long as you've got an income and you want to win, then click that link, book a call, and let's get on the phone and talk. Thank you for watching the video today, guys. I really appreciate it. I really hope you found something valuable from this. Like I mentioned, if you could like and subscribe to the channel, I would really, really appreciate it. I will see you in the next video.